Welcome back to Brashenomics. People aren't really thinking about their taxes very often here in the beginning of August. Well, because it's nowhere near April right now. But there are people who do, and they're called your accountant. Boyce Goff joins us with GDC Financial Solutions, owner of GDC Financial Solutions, who knows taxes from both sides. Throughout the year, people who are not thinking about taxes on a consistent basis maybe tallying all the things in their head that they can actually save money on come tax time. And you'd brought up quite a few missed tax deductions that are pretty common.
Well, I just kind of quickly jotted down about 12 of them, but let me just run through them real quick. I mean, first of all, if you're traveling for business, there's a lot of expenses that people don't really pick up on. So and we'll come back to these on an individual basis. Insurance and medical expenses. A lot of people look at it and say, well, hey, I don't have enough medical expenses to cover the 7.5% adjusted gross income. But then we start picking up on the long-term care, the medical insurance premiums. We pick up on the medical expenses for dependents. We pick up on their Part B on their Social Security. The next thing you know is, oh my gosh, we got some money there. Of course, I get some clients, well, it's not that important. I said, well, yeah, thank goodness you didn't have a lot of money on that area, because then it's a catastrophe that we have to deal with. But, buy those expenses are deductible, and people don't know that.
I mean, these are things that you think are just life expenses, but you just don't think about those things.
No.
You're so focused on, well, mom or dad or husband, wife at the hospital. You're typically not thinking, well, guess what? I'm going to get a big tax deduction at the end of all this.
No. Well, one of the other things, too, with health insurance, I mean, that's one of the big things that's with the new Obamacare that we all need to look at and be very cognizant of. A lot of small businesses, they do get a benefit of adjusted gross income, which is a much better deal than going through Schedule A. And so it's good. Mandatory employee contributions. A lot of clients, particularly in this state, is SDI, state disability, and state unemployment. If you're having to have that taken out of your paycheck, the client doesn't pick up on it and doesn't give the information to us. State income tax and estimated tax payments. I mean, we have people who move in from other states and they don't pick up on their state estimated taxes that they paid or taxes that they had to pay the prior year before they moved in, or pay on the prior year that came into this year. They don't pick up on that. And so, that's a pretty good sized deduction sometimes. Mortgage points, which is really in your business. You go out and get a refinance. There's points that have to be paid.
Not always, but sometimes. Not always.
Of course, I know you never put them together so that we don't have to pay points.
We typically don't, but that's a whole other story.
But, also on home purchases or new homes that they're buying. A lot of people don't pick up the points on the other side of it. The other thing is they don't look at their escrow statement, and there's always a real estate tax adjustment that they have to pay there. They don't pick up on that because they're not going to get a statement from their bank saying, oh, you paid this much in real estate taxes this year if it was paid on your escrow statement. So you pick up those. Mortgage insurance premiums. It's a great deal right now that we can do that. People forget about it. Of course, it comes out on the 1098, but sometimes people don't pay attention. Volunteer. If you're doing volunteer work, donations, there's expenses, out-of-pocket expenses that you need to look at, travel expenses, job search expenses. Right now, people are looking for jobs. A lot of people don't understand. All of the expenses that are associated with a job search are deductible. So it's a good deal, especially if you have to move across the country and things like that.
So with all these different things that are constantly you can miss out on, how on earth is a person supposed to keep track of everything for themselves? I mean, it seems like you'd have to be pretty diligent.
Well, my best advice to a client is get Quicken or something like that and reconcile your checkbook every month. Make sure and your credit cards, and just, spend that half an hour a month just going through and listing your your expenses and seeing what they are. And then at the end of the year, give that information to your CPA and let them go through and you can give them a printout and it can be categorized and they can go through and go, oh, yeah, no, yeah. And so it's very good. And do it through the year. I mean, even with myself, I sit down about once every 2 months and I go through and do it for my family. It's amazing how many deductions I pick up.
It's probably amazing how much you realize, not only how many deductions, but where you realize you start spending your money.
Yeah, I see a lot of waste in there, but that's not the topic
not
of
you
this
in particular, Boyce.
No, I see it not only for me, but for my clients. You see a lot of waste in there, and that's where we really work with people too. Is we say, look, why don't you tell us what you need to live off of? Because the more money you got in the checkbook, the easier it is to spend. And so let's take that money and keep it someplace else. And so when it's out of mind, it doesn't get spent.
Yeah,
and we can save it and do better. Other things that are really important, investment interest.
We just have about a minute left. Okay. We do have to go to break. But,
okay, fine. I'll wrap it up then. Just those kind of things. Think about it. Investment interest expense. People think, well, I don't have any investment income. Well, do you have any capital gains? A lot of people don't realize you can offset your investment interest expense against your capital gains. And that's a big deduction for people.
All of this, in a nutshell, would say to me, this is why people shouldn't do their own taxes. I mean, just you talk about these little things. I mean, doesn't having a CPA typically pay for itself pretty quick? I
would say so. I have clients that come in and try to do the returns themselves and give me the information, and I go through it, and I invariably pick up more money for them. More money in their pocket. I tell my clients that in the planning process, we'll save you 2 to 3 to 10 times what you pay us in taxes, or what you pay us in fees.
Well, Boyce, as you always bring to light, taxes, they're not just for April anymore, are they?
No, but it's one of those things. Death and taxes. John went over death, and I'm going over the taxes to get there.
At least Stephen had some nice, lightful information about properties going up. Boys, we have to go to break. We'll be right back, and everybody's coming back. We're going to talk, actually, let's finish up the hiring people, finding value versus cost, and helping people understand a little bit more about that. We'll be right back.